Welcome to this video, which is all about one of the most successful hedge funds of all time, and probably the most famous, the Quantum Fund, which was set up by George Soros. And he also had two other legendary traders working with him, who were Jim Rogers and Stanley Druckenmiller. What I want to do here is just go through some of the techniques the fund used and its philosophy, and basically just go through what we can learn in terms of trading forex for ourselves from such a legendary fund and such obviously high profile and successful investors. Now, one of the keys to the Quantum Fund's success was that it would basically search out trading opportunities anywhere. As Jim Rogers said, the market doesn't matter. You go for where the high probability of success in your view is going to be. And I think that a lot of forex traders could learn from that, because many are just too restricted on the currencies they trade. They just, for instance, stick with the major currencies. Yet you've got a vast amount of currencies that you can trade, and you'll increase your profit opportunities tremendously if you look at a wide variety of contracts. I mean, I've never understood the concept of traders saying I only want to trade the Euro USD. It very often is not the best trending market. Broaden your horizons and look at other pairs. It's a chart formation at the end of the day. So I think you've got to really look over a wide variety of contracts to maximise your profit potential. That is what the Quantum Fund did, and they're also very patient in terms of waiting for opportunities. There's obviously a perception that hedge funds are diving in and out of the market all the time, trading in seconds or minutes. And the Quantum Fund wasn't doing this at all. It was a very patient trading strategy, just waiting for those best opportunities. And that is, again, I think something that just ordinary forex traders like you or I can learn from. It doesn't matter how much you trade. That has got no impact on the profits you're going to make. Okay, you don't need to be trading a lot to make a lot of money. You just got to be trading the right opportunities. Jim Rogers made the point that he liked to wait for trade setups which he considered was so easy it was like going and picking money up that was just lying in the corner of the room. And you don't always need to be doing something. And George Soros actually said, if you find investing exciting and fun, you're probably not making any money. It means you're probably trading too much. So I think one of the key things, particularly beginners can learn, is not to trade too much. Now, in terms of the Quantum Fund, where it actually managed to really supercharge its gains was that it would gear up its trades. So if they saw something they really liked, they would be very overweight in it. Okay, and I think a lot of traders do not want to take big positions. Okay, they always want to risk 1 or 2% of their equity. That's fine. However, if you really want to make big gains, it's a known fact that in an odds-based market like forex trading, you actually are better off to vary your bet size. Okay, and variation of bet size is the key. Really to supercharging your gains. And it's a very famous story when Stanley Druckenmiller was betting against the British pound, and Soros asked him, how much have you got? And he said, well, I've got a position of $1 billion. And George Soros just turned around and said, you call that a position? And Druckenmiller said later on that it's that ability to gear up, which he learned from Soros, that really will make you those big gains. And Druckenmiller did actually say it does take confidence, it takes courage, to be a pig at times. But if you are, and you've got the right trading opportunity, you can supercharge your gains. I think traders are kind of so keen to restrict risk. Okay, they actually never ever go for the big opportunities, which I think that you need to do. Also, with the Quantum Fund, we've all heard about its big successes. Now, obviously, the British pound bet is the most famous in forex history, but it had a lot of losers. It lost a lot of money, on Asian markets and so forth. And George Soros actually, said, the reason I'm rich is because I know when I'm wrong. And the quantum fund, just wasn't making money on every single trade. It was losing a big percentage of its trades. However, it had good money management and was able to basically keep equity intact for when the big high odds opportunities gave the fund money. And a lot of traders, I think it's a known fact that most traders just simply cannot take losses, and it's just something you just got to learn in forex trading. If George Soros doesn't mind taking them and doesn't feel they hurt his ego, then it should be the same for you. And it's like Soros said, there's a big myth about the markets, that they're predictable. It's like he said, they are just not predictable at all. But once you learn this, and it doesn't matter that you're wrong, so long as you are trading the odds. If you keep your losses small, you will get those trading opportunities. Now, one of the things that George Soros said in particular that I really liked is that the worse a contract looks, the less it will take to turn it around, and the bigger the profit potential. And contrary trading is the way to make the really big money in forex trading. If you go against the herd at those important market turning points, that is where the reward is highest and the risk is at its lowest. So I always think, as a forex trader, you should be thinking contrary to the crowd. In fact, if too many traders agree with your opinion, you'll be very wary of taking the trade, even if the chart setup looks good. You generally want to be in the minority when you're trading forex and stay away from the crowd. Obviously, the actual workings of the quantum fund itself are not public knowledge, but I think what we can learn from it, and from what the guys say who work there, that looking at a lot of different contracts is a great idea to increase your potential for a profit. Only trading the really high probability trades and ignoring the rest, being very patient. Having the courage to gear up a big trade, varying your bet size all the time to maximize your gains, and trading in a contrary fashion. And just before I leave this video, I just want to make another point. There's a myth they were all computer boffins and using a lot of computerization down at the quantum fund. They weren't. And George Soros actually said their techniques were very simple. As he said about complex trading techniques and strategies, the more complex something is, the more prone it is to error. So they had a very simple trading strategy. I think it was obviously very sentiment based, and obviously they did a lot of work on the fundamentals. But as forex traders, just you and I, never be deceived by the complexity myth, and the computer myth. It doesn't increase the chances of profitability. Okay, thank you very much for watching this short video on my views on the quantum fund and what made it successful. And if you've got any questions or queries, please feel free to email me. Thank you very much for watching this video. Take care. Have a good day.